Hello traders and welcome back to another trading day with the team. Today's a slow day. Yesterday we had a more setups than today, right? So this is the US dollar Canadian dollar that I just sent you. Remember that it doesn't matter. This video is only for VIPs. Yeah, no one else is going to see this but you guys. Right, so this is the US dollar Canadian dollar. Pretty self-explanatory. I already sent you guys that analysis, right? So, but before we go any further, right on that analysis, I told you that the DXY. After yesterday's a very bearish day on the DXY, which I think was more than a negative half a percent, right? From high to low, minus 0.52% on the DXY, right? Every time that price trades at these highs, we get price hammered down. Now, and if you remember yesterday, I was talking about the possibility of a deep buy around the 92.50, but this hourly candle completely crushed that. And we closed very low on the day, right? To date, open with a gap up. You can see it right here, right? Let me just thicken out this chart out for you guys. Right, today open with a gap up, the first few hours of trading, right? We came to retest that previous broken level, and then completely dipped below yesterday's lows, right? So that to me is very, very bearish, right? Let's see some levels to the downside on the DXY, right? I would love to see the DXY retest at 92.05 to 92.07 level. And to be completely honest, it's looking like it's going to, right? We pierced through that weekly pivot. We printed a new daily low. Everything is looking very, very bearish on the DXY. Now, if we look at the daily chart on the DXY, I keep telling you about this. Shit. That wasn't the right one. I need my brush. About this rising, pennant. Okay, that the DXY is trading after that big FOMC week. Bullish momentum is really drying up around the 92.68 to 92.80, right at these highs. We are still trading inside of this. We are still trading inside of this structure, which means that the real structure or the structural breakout has not yet been validated, which means that we could definitely have a retest and a spike higher before eventually breaking down, right? Or the other scenario is that we don't break out of this rising pennant and price just continues to move higher. Now, because of the nature of this pattern and at the level that it's being created, the highest probability is that we will break to the downside, right? More so because of the hype of the Federal Reserve hiking rates. It's kind of blown over, right? And rationality is coming back to the markets in the sense that moves to the downside in DXY or the US dollar are starting to happen, or sellers are starting to jump in, right? And I say rational because of the pace on this round of quantitative easing being kept at the same by the Federal Reserve, and rates being kept at zero, and not a move on a hype of future rate hikes, right? So everything's coming back to normal. We remain bearish on the US dollar fundamentally, right? Having said that, gold yesterday had a huge breakout. Now I'm still holding my gold longs. I'll show you. Hold on just a second. Right here, I'm still holding my long my big long position in gold. My first targets are around the 1845 level or so. Yesterday I bought a little dip with a little position that is now at break even. We haven't had any opportunities to really get on a bullish signal in metals. We will do so, however, whenever we get a retest of a key level. Now, on the daily, you can see that this was clearly a bear trap, the same one that we were talking about, and on the 4-hour chart, this was really, really a clean breakout. Now, if you remember the clean breakout of this formation, this is a flat rectangle. This is a rectangle, and it is a continuation pattern. So if we do a calculated target on this breakout, we should be looking at least the 1887 or 1890 or so. Let's hope that we continue to rally, and we keep making new daily highs in gold, so everything is looking very, very bullish. Now, there hasn't been any opportunities to go long after breakout. The breakout just happened yesterday. There was this deep buy, but it was late on the day, and we were not going to take a late on the day signal, right? Silver, on the other hand, is lagging a little bit on that breakout, right? So we're still waiting for silver to move higher above that 2678 for a continuation to the upside. Copper, copper on that's the 4-hour chart. Copper on the 4-hour chart remains, trading inside of a range, right? If you look at the daily chart, we are trading inside of a range. It's looking pretty bullish in my opinion, but we need really to break with with those highs in order for a continuation. Crude oil yesterday had a fantastic day for sellers. Now, myself, I got stopped out on a sell that I had a few days back, right? Well, I'm gonna show you my sell actually, right? So I sold crude oil. What is this? I sold crude oil, right? Right here at the retest of this level, and I got stopped out. That's fine, right? And yesterday I wasn't going to be a seller, right? Just because I saw this hourly candle, right, at the weekly peak, very bullish to me, right? So if I was going to get involved, was going to be at a buy above yesterday's highs or the day before, right? But again, sellers took control of this market, and at the moment, I don't see any setup to do anything at all here. Now, let me just thicken this chart out for you because I think that we could have an opportunity here at the retest of this level right here. So if price came back, right, to retest this level, the weekly pivot, this thick zone right here, I would very much like to see a real rejection, right? So we can get a good risk to reward ratio on that trade, right? So that's the idea, and I'm actually going to put on an alert here. Hold on, let me just delete all of this. I'm going to put on an alert here, right? About here, right? At alert. So, hold on. Let me just put key level retest. All right. So there you go. You're going to be alerted with my alert if my alert kicks in, right? UK oil, the same thing, but it's cleaner on US oil. So let's have a look at some major currency pairs for the day. Now this is quite interesting, right? Because yesterday was a very bullish day for for the euro US dollar. Now let's have a look at what's going on here on the euro US dollar on the daily. Now on the daily we are printing a reversal pattern right here that is about to pop, in my opinion. So this is a falling wedge, a very nice reversal pattern right at a key level, right at these lows. This is an historic price action where we saw buyers jump in this market, right, or sell off the USD, and we saw a move practically from low to high of about 5.16% or 600 pips. That's a huge move. So, and the last time the price traded around these levels, right? This is where buying power or buying volume jumped in, moving price up about 4.8% or 563 pips. Now, we didn't quite retest the zone, but if price breaks with the 118.89 level, right? So right here, we could in fact be looking at a major a major shift in momentum here. Now, that's the daily. On the 4-hour chart, and actually, let me just pause the video because I need to change the colors here. Yeah, that's much better. That is much better. So, on the 4-hour chart, right, this is what we are seeing, or this is what we're watching, right? Yesterday was a very bullish day, but if you remember, we were against buying the dip here just because of how this is the 4-hour chart of how bearish this move was. Every single week, we were creating a new lower weekly high in a new lower weekly low. This was very bearish, right? Now, we are still inside of this structure. So buying here will make no sense at all because we don't know what's going to happen. We don't know if price is going to break through or if we are going to see a new leg down before the actual breakout. So we remain calm and waiting for that breakout. And on the hourly, right, hold on. Yeah, on the hourly, this is what we really want to see. We really want to see price break the 82 level or so, these highs right here, this level, and a clean retest, price stabilizing around this level before we buy in. Why? Because that would mean that falling wedge on the daily would be broken with. We will be above the make it or break it area for bears, and the highest probability move would be to the upside. So that is what we're waiting on the DXY, on the Euro USD. So we are going to put on an alert again right here. If you don't use alerts, you should. Also, I do annotate my charts, but not for the videos, just only for me. Breakout retest, right? And play. Cool. So that's it. The pound US dollar, now the pound USD. It's kind of the same story, right, than the Euro US dollar, but it's less clean. Here on the pound US dollar. This is a very, very choppy range that we are seeing. The pound trading. This is the 4-hour chart, right? And well, let's have a look at some patterns, right? The immediate make it or break it level is this one, the 139 level on the pound versus the US dollar. We are, waiting for the breakout of this pattern. If you can name it a pattern, right? Doesn't look like much, but it's still a structured move that we are trading in, which means that we will have a clean breakout eventually. So the make it or break it level for this would be the 139. Yeah, the 139 level, and we need a clean break. We will not be looking for breakout trades or momentum because of this huge selling pressure that we have seen here. So what we're going to do, we're going to wait for that clean breakout and the retest of the 139 before going higher. Remember that you can ask any questions on the comments about this video. It's only for VIPs, so I will answer it personally. Again, the US dollar, Japanese yen. This is quite good because we are riding with the string trading team, a US dollar, Japanese yen short. So hold on. We are riding with the swing trading team, a US dollar, Japanese yen short. This is a long-term trade that we are involved in. Do not try to chase it. Actually, ever try to chase a trade that I'm talking about. I mean, we just got in yesterday. We're running at about a 50 pip profit, targeting these lows for a 230 pip move or so. If you want to be part of our swing trading VIP team, I'm gonna leave you a link below this video. You are welcome to join us. Right? Right now, there's nothing more. There's nothing much to say about this market other than it is bearish to me. More so because, um, more so because of the daily. Right? This is a big level on the daily. The one or the one that we were trading in at the beginning of July. The one 111.72 or so. The last time that we were here. Um, Trading around these levels, price just completely crashed about 8.18% or 900 pips. I'm not saying that this is going to happen again, but if you look at what price action tells you, right? Price action tells you is that we are, I mean, our price has broken with the, we could call it the long-term structure, right? Now, for price really to dip to our long-term targets, we really need a clean break. I'm sorry, just below these lows or the 109.52. Right, so that's the US dollar, Japanese yen. Yeah, I'm gonna finish up this video today with that. Again, thank you for joining me and have a great training session.